So yeah, we're recording. Like I said, if I see the odd question where I think I can answer while I'm teaching, that's fine. But I don't want to kind of disrupt what I'm going to talk about in terms of price action and how I've kind of seen this month and the last couple of trades I've taken. So just looking, this is the DXY. I'm on a weekly time frame. Now, first thing to remember about everything you do when it comes to trading is bias. Very, very clearly, you need to be trading in direction with the overall trend in how price action is moving. If you are trying to trade on a smaller time frame in these areas to go higher, thinking that you'll get the move, which essentially, from if we look to the left, it looks like that. You're not going to get very good trades compared to if you're trading in these positions in bearish conditions, which are in these areas, you're going to get more of the move. And that has always got to be your main focus when it comes to trading. Scalping, in my opinion, I'm not going to sit here and say scalping doesn't work. I think it works better, even still, if you're trading in direction with a higher time frame. But I don't think scalping is a sensible move for a lot of traders because scalping requires movement on a very, very, very small time frame. And overall, you're going to have to accept the fact that you're going to take more losses. Now, the market generally, I mean, to the best of how I understand the market, the volume you see on these weekly candles is the true volume in price direction. Now, when you see huge bearish candles like this, for example, that's an indication it's going to go lower. It's as simple as that. Obviously, we want to see price coming back into these areas. We would like to obviously get price higher into what we call a premium level. You can see here that never happened in this instance. But then the trading range kind of just continues on until we obviously get a satisfied retracement. Now, this is still dumping to the downside, which probably means from a monthly perspective, this entire trading range is not actually finished printing, which means we should, whilst we are still respecting bearish price action, and we can utilize that by seeing areas of inefficiency or areas of or order blocks or breaker blocks, whatever you want, or price retrace into the 50% ranges, whatever. We are still going to look for bearish price action until we are told otherwise. Now, if you've been, I mean, because we're on the DXY, this is a selling movement here. But if you're selling the DXY, obviously you can't trade the DXY. If this is going lower, it means euro and pound will be going higher. So, for argument's sake, if you're selling all of this down here, at some point you are going to get taken out of the market, and that's absolutely fine. And then you're probably going to get a couple of losses, even selling on the way down as well. But you can see here this weekly area where we kind of are now. This was at the end of July, huge wick pushing higher, but the body closed under the bodies of these candles right here. That is still, in my opinion, bearish momentum. Bearish momentum. So it's only right to still continue to look for bearish momentum. Now, the issue a lot of people have had, I've noticed around social media, and this is a real thing, by the way, in terms of typical trading months, good months versus bad months, is this is what we've had to contend with pretty much for the whole of August. It has really been in a consolidating sort of movement coming lower, but still just consolidating. And a lot of people are bullish on the DXY based on the fact that we had this bullish move on the daily time frame. So people have suddenly thought, okay, that's fine. I'll look for bullish price action, but they're forgetting to include the weekly time frame, which is a higher time frame than the daily time frame. So when you're doing that, you're not in line with the overall trend. Now, the weekly time frame for me is bearish, which is why I am bearish even on the daily time frame. Now, what I liked about this daily huge daily push higher is the first thing that happened when we pushed higher is we created this fair value gap here, which at the time was a fair value gap. If I just replay everything, this is what it looked like. And this was the wick that was being created. Now, what then happened was we broke that area of imbalance and we created an inversed fair value gap. Now, that is where obviously you can see the fair value gap has not been respected. So it's an inverse imbalance. We also created inside that inverse fair value gap, we created an area of sell side imbalance. That is both of them together is called a balanced price range, a really strong area for price action to react from because basically you are adding two pieces of confirmations out of maybe the five that you use, whatever. But you're adding two pieces of confirmations, an inverse fair value gap and imbalance, basically two imbalances together. And you're sandwiching together two areas, which is going to make it higher in probability. It adds more weight to that place. And that happened whilst the wick was being created on the daily time frame, on the weekly time frame, sorry. So again, we can come out of replay mode and you can see that the actual balanced price range happened inside this wick on the weekly time frame. So I have been bearish on this thing ever since we created it, despite this bullish move higher. Now, what we have done, again, since August, since the very beginning of August, or the 4th of August here, is we have just been consolidating. So there's no real certain way of knowing if this is going to actually react higher from this range or continue moving lower. But until I get a big push higher, almost inversing this fair value gap here, I am still going to look for bearish price action on the DXY, which means we're going to look for bullish price action on euro, on pound, on Aussie USD. And they are going to be the higher probable moves. Now, I still take losses when I'm looking for price action moving in the overall trend. But I know the higher quality setups are going to move in alignment with the trend overall. Now, to be honest, like July, as documented on Instagram and things like that, was really, really good for me. Like July, I honestly, it was just like fantastic. And then August has been, again, not terrible, but at the same time, it's been a month that's really tested patience. And I've spoken to a lot of people personally who have had a lot of issues in August. And mainly the biggest issue you've probably got in August is that you are unable to be patient. For example, last week, in the whole 5 days of the week, I did not take a single trade. I didn't see anything I wanted. And the reason I didn't see anything I wanted is because I did not know which direction price action was going to go in. And one thing I think everyone has to do is don't say, for example, quote unquote, I don't like this price action. It's not in optimal range or whatever. Don't try and skirt around the fact that you just don't know which way price is going to go, because no one knows 100% which way price is going to go. This could go higher or lower, and it's got to go one way higher or in one way lower. Like there is absolutely no two ways about it. It's going to go higher, it's going to go lower. Your job is very, very simple. It's to guess the direction of the time of the candle that you want to trade. Now, I'm guessing that this is going to go lower based on the fact that from the weekly perspective, we are still bearish. And we've got the balanced price range. And then obviously you can see we're even now, as you can see, this huge area of inefficiency which sits in here, we've actually inversed that as well. So inside all of this consolidation, we are still breaking lower. And even then you can see within this area, you've actually got this order block, which sits right here, or this up candle, which sits right here, is still being respected. It's creating a lot of liquidity above these highs, in the middle of these highs, at the bottom, whatever. There's obviously liquidity all over the place here. We obviously like to utilize highs and lows to target, because the most of the volume that is going on in August and what's leading to all this consolidation is built up of a few different things. Again, no one knows the real true definition, but price action tends to do this in August. And not many people, I've been doing this a good few years, and I've always thought August has never been the best. So you could blame it on potential price movement, insiders whatever aren't trading this month. I don't know, but I know there's a massive contribution towards retail traders who are purely guessing which way price action will go, which obviously will show the volume of trading which is actually happening inside here. And there's a real uncertainty which is causing consolidation, back and forth price action. It's liquidity being created both sides. Now, for me, I still think this is destined to go lower until essentially I am told otherwise. And what I'm looking to do is wait for price action to give me something clean, which is why I didn't take a single trade to the down to any side last week. So again, when we look at this news candle that was created on Friday, huge push lower, that made me even more convinced this should continue to basically press press lower. So if we have a look at euro as a good example, we were huge bullish movement, which is here now. Again, very simply, you've got the low of a range and you've got the high of the range, and price action comes well and truly into these OTE level areas right here. So I was looking, this was yesterday's price action for me, I was looking for a buy inside this area. Again, it was obviously worth noting that we were reacting off of this order block. And then inside that order block, we had a nice push higher on the 1 hour time frame. We actually had an inverse fair value gap, which was being created right here. We also had this imbalance here. My entry was inside that 1 hour. Now, in fact, it might be that one there, but one way or another, what's happening in this situation is I've taken a buy based on everything I see and understand about price action. Because the way I like to trade is I like extra pieces of evidence to come. So when you see areas of inefficiency, when you see balanced price ranges, and you see that break to the upside, which was here, again, I was a participant in there. Obviously, had the chance to go break even, never did, and price action obviously stopped me to the downside. Now, that's a losing trade, but you don't need to win every single setup in order to make money. But there was nothing wrong in my eyes anyway. There wasn't a whole lot wrong with looking for a move to continue moving to the upside. And even though we've been pulling lower and lower and lower ever since, we've had a huge bullish push in this direction today, which actually led me towards continuing with a bullish bias that happened today. And what I'll do, if I bring over this chart here, we can see, you guys should be able to see this. Let me know if you can't, but you should see, I've got the euro chart, I've got the pound chart, I've got the dollar chart right here. Now, my reason I traded on GU today. Now, if we look at the range that you can see, we've got this big push higher on euro, we've got this big push higher on pound, and we've got this big push lower on the DXY. Remember, if the DXY is bearish, then we're looking for bullish price action on pound and bullish price action on euro. You can see that where we got stopped out, this was where I got stopped out yesterday, which is again fine, whatever, don't care. But again, looking over at the DXY, you can actually see the same high, which is the same as this low here, because they're invertedly correlated pairs. We actually respected this price action. And actually, if we look at the dollar and we measure this range, you can still see this is where we traded to go higher on euro. This is where I ended up taking the loss somewhere inside there. And what essentially I was looking for or noticing was when I was trading today was that we're still respecting this high, which and you can see that euro is disrespecting the low. That is a crack in correlation. But I can't trade the DXY, and you could definitely trade euro based off of that and giving it a confirmed liquidity sweep. Now, my trade was on the pound because we actually had another area where the same low, which was created on Friday, 22nd of August, was being protected. This was being respected. And this is a cracking correlation between all three assets, but pound you can trade as well as euro. And I opted to trade in the British pound today because it was showing a relative strength to the upside. So essentially, when you see divergence in the market and you want to know which pair you should be trading, let's just say you've got something like that moving here. And then let me just mirror this, but create a hypothetical divergence in the market. If you see one pair is doing that and the other pair is doing something like that, the actual strongest pair to trade would in fact be the one which has showing a relative strength to the downside, because this is showing an unwillingness to crack above that high there. And the pair on the other side is showing more of a willingness to go higher. And it's confirming a liquidity sweep, which is great, because there's a whole confusion of, oh, I should trade the one that had the liquidity sweep. Well, yes, you can, but you're actually going to get more volatile price action from the pair which did not make the liquidity sweep. And you can kind of think of it that the liquidity sweep or the raid in price action has happened on behalf of another asset, which is correlated to the same one you're trading. And then it's obviously shown that price action is willing to go lower. This is like, it's basically in very simple terms saying to you, I am not going above this high. I do not want to. I want to go lower, and I'm going to show you that by rejecting the thought of going above this high. So very similarly, when you look at the real price action of today, you can see that obviously we're in these OTE levels on all of these pairs here. It doesn't take a genius to work that out. And we can see that price action is refusing to push below this particular low, which means there's a higher relative strength to the upside on pound. So I was basically looking for a bullish move somewhere inside here. And the idea is to try and catch this trade as low as you possibly can. So again, the way I was looking for it was inside GU. Again, you can see, in fact, the actual execution, because I entered this is my live futures account, and I entered it inside here. So if we use the futures chart for this, it's pretty much the same price action. And we measure, not only do we just want the confirmation, you can see obviously we are sitting inside an OTE level, which you can see right here. And I'm going to just delete the fibs because I think a clean chart is very, very important. If we just go down to a 1 hour time frame and we kind of observe what the 1 hour is doing, the first thing the 1 hour time frame actually did, and this blue tick is the exact entry which was here, we created an inverse fair value gap. So we were coming lower, and then this 1 hour candle, which was printing just at the open of the New York session, closed above this imbalance. I'm just going to zoom in so you can see it a little bit clearer. That line there is the entry. If I hover over the arrow, you can see the entry was literally on the retest of this inverse fair value gap to take price higher. Now, there's a couple of other reasons which make this trade so much better. My stop loss was just under this inverse. I had a 1 to 2 just coming above this high. It was around about here. The actual exit was where that red arrow is here. So as soon as we swept that liquidity, I was out for just over a 1 to 2 in this. But what I want you to do is just look at this for a second. And I want you to, if I just use a vertical line to highlight, today is Wednesday. If I just highlight the candles opening price. Now this is really today's price action as far as it goes with futures chart, obviously up to now. So if we go up to sort of 11, which will be very, very soon, if I bring it to the actual candle opening as well, this is all of today's price action. So the candle opens, the new daily candle starts printing all the way up here, and then it starts coming lower. And literally this 1 hour entry was the lowest entry. I mean, you maybe could have caught one on a really small time frame, but this was a real good entry based upon being in a higher time frame area of interest in an OTE level, we also had this inverse, but where we're utilizing, you can use either the candle's opening price, which is 11 p.m. UK time, 6 p.m. Eastern, or we can use the famous 5 a.m., which is midnight New York opening price range, which is obviously here. I prefer this one personally. You can see that price action was trading under this opening price, meaning if we look at this from the way that an actual candle, a daily candle, has printed, it opens around about here. Price action is trading low under this opening price. You can see that it trades higher, creates the inverse, and then comes lower. This was the entry to the point where it's obviously all the way up here now, and it looks a bit like that. So this candle now looks essentially from a daily perspective in terms of exactly where this thing is traded. It is right down here. This is the candle. And what we have actually managed to do is catch right about here the real low of this area by utilizing a higher time frame point of interest. That's PO3. That's all these different things that add up to this trade being really, really good. Now, the Euro trade didn't have this. I still thought this was going to potentially, because obviously it had to go lower to stop me out. So I obviously misjudged it, got stopped out. Again, that's absolutely fine. That happens. And this even a trade as quality looking as this will still stop you out from time to time. It's very important to understand that. Now, another area of confluence I had with this trade, if we go to a small time frame and we just kind of look, what I've actually got on the futures chart is I utilize this indicator. This is showing you a standard deviation range, which is created during the Asian session. I'm not utilizing the famous central bank dealers range. I'm utilizing a specific time period window, which is between the hours of 1 a.m. UK time, which is 7 p.m. Eastern, all the way up till 5 a.m., which is midnight New York. So there's a small window where you measure a range. This box confirms that range. Now, inside this OTE level, you can also see that we were hitting 2 standard deviations of price. So we came as low, almost to the pip of 2 standard deviations. And then after that period, this is the 2 standard deviation, we created this 1 hour inverse fair value gap. So on top of the fact that you had heavy divergence between euro, pound, and the DXY, we were still showing bearish price action and more bearish price action on the DXY. And we were showing bullish price action on pound, as well as obviously showing more bearish price action on euro. But this was a confirmed liquidity sweep, and we ended up going higher today. The entry was under the opening price, right at the bottom. So you've literally caught low of the day, and it happened within 2 standard deviations of what I'm using is measuring. I'm personally at the moment measuring the Asian range. You can measure the central bank dealers range if you want. I was measuring the Asian range on this particular level here. That's just personal to how I like it at the moment. So, and I didn't even go lower. The only time I went on this chart was to just measure this standard deviations and just check where we were. You don't need to go lower than a 1 hour time frame to find such a nice, accurate pinpoint entry and get over a 1 to 2. And my win rate this week overall is 50%, but I've made money. This is the beauty of only looking for trades which are going to offer you good risk reward in your setups. So it's always important to understand that. And if you can find a couple of these setups, like I said, you're never going to win every single trade. It's impossible. But this is going to help you understand the power of how the process actually is. Each and every single day, the aim for you is to try and catch the low or the high of the candle. And you need to make an educated guess as to whether you think it's going to go higher or lower. Based on the price action I saw on both days, I wanted this to go higher. Again, we got stopped out. This actually turned into internal liquidity, which was created right in there. So I took punishment for that. I ended up taking a small loss on my account. I wouldn't even call it punishment. It was just a small loss on my account. And then obviously recovered today with a nice win. And again, the reason the GU trade worked out so much better, because if you look over here on this chart, you can see that this lovely big move, this lovely big candle didn't go as high as the candle which is sitting over here, this 4 hour candle here. You can see it's still pumping higher. It's swept above these highs. That's because there was higher relative strength to the upside on pound, which means there's going to be more volatility in the market, which is literally showing you that right here. So this is why GU was always going to be the better setup to take today, and that is essentially proven by looking at that. I mean, if you held on to it up to these highs, that would have been a really nice setup. I don't feel the need to hold on to these trades for as long as this. I've really found comfort in just getting a 2 for 1 in what I'm looking to trade. You could have definitely been a lot more conservative and targeted these highs up here, and that would have been a really nice trade as well. There's been plenty of other good setups which have been forming over the last over these pairs, which generally look really well. But the main thing we have to really look at and understand is where we think price is likely to go. So now I would just assume this is going to continue moving higher. My next point of interest, just looking on pound, would be inside an OTE level on this particular range. If we can do something like that, I'd be looking to see if price action can maybe fill in some of these areas, and then I'd be looking to take this higher, usually during the London or the New York session. But typically in one of those sessions, you are going to have an opportunity to catch high or low of the day. It doesn't really matter whether it's in the London or the New York session. You can catch a continuation if you miss the high or low of the day. There's usually opportunity for that to happen. Maybe tomorrow's going to give us a continuation trend higher. And if it does go lower, then at some point you're going to take losses in the market. And but this is the main thing, and I'll finish on this. You do not want to know. I mean, you obviously want to know the direction of the trade, but you do not need to know for certain the outcome. No, the best traders in the world do not know the outcome of their trades. They just don't, because no one can tell you the direction. No one could have told you for certain what direction this candle was going to go in. It could have easily just gone lower, but we utilize the edge we have in the markets, and we make a nice probable guess as to think, I think this should go higher based on what I know and understand about price action. But listen, I guessed higher yesterday and I got stopped out. But I used the fact that we had stopped me out, which has created the divergence. So essentially, yesterday I was liquidity. Today, I got it back and some. And that's the beauty of trading. You don't need to be right. In fact, if you look for a 1 to 2 trade every single time, and you basically let it hit your stop loss or you let it hit take profit, you only did a 40% win rate. If you have a model where you're only looking for a 1 to 3 setup, honestly, you probably get away with a 25% win rate. I'm not saying it's going to be a 25% or a 40% win rate. Some months are going to be better than others. Of course they are. But when you're riding a tough wave, especially during the month of August, where your win rate just naturally is not going to be what you really want it to be, then relying on that good risk reward and good risk management is really going to keep you out of trouble. I've made money this month. I've made good money this month. I haven't made the money I make most months through trading because it's just not been that month. But even still, if we're patient, we practice good risk management, good risk reward, these setups will come. So if you're on the live recording now, hopefully you have got some value from this. I will sit back and do a Q&A with you guys. But if you're watching this recording back, wherever it is, I will see you on the next one.